Welcome to the CLS Monthly Market Review. I'm Rusty Vandeman, Chief Investment Officer at CLS Investments, and with me this month is Giovanni Zelaya, Client Portfolio Manager at CLS. Welcome, Gio.
Thank you.
So we've got another month in the books, another good month for the markets. U.S. stocks are up, international stocks are up, commodities were up nicely. A couple things were down. We had small caps were down, emerging markets were down, bonds were down a little bit, but still a pretty good month for globally diversified portfolios.
Yeah.
I had you on here because it's been a busy month for both of us. We've both been on the road. We've talked to a lot of advisors. I know that you've taken a lot of questions from advisors and kind of want to get a sense of what you're hearing.
Yeah. So I have been traveling, but I think you've been traveling more than me. Where have you been?
You're going to turn around back on me, huh? All right.
That's how it goes.
Well, you know what? I have had actually a couple good trips, and I do write about them in the latest monthly. So this past week, I visited the Capital Group. They run the American funds. It was a great meeting in a lot of ways. Obviously, they're a quality firm, and one of our strategies is focus on them. But they have a piece which I think is very interesting, and it matches some of the stuff that we've written. And it was talking about some of the myths in the bond market. And great piece, and there's a couple myths I want to talk about. And first of all, just because the Federal Reserve is increasing short-term rates, it does not mean the overall bond market has to lose ground.
Sure.
And so there's a lot of history on that. We've written about it, and they put out a piece, and it's in the monthly. Check it out. The second thing is that high-yield bonds always outperform. And high-yield bonds are a great asset class, but they have a lot of equity sensitivity. It's not the bond market. So if you're looking to diversify your stock market exposure, high-yield bonds aren't necessarily the best thing to use. High-yield can go backwards. So
Sure.
that was one of the things on one of the trips.
Well, that's interesting. You also did some traveling last week. Can you tell us about that?
Actually, that was really good because I've written about that also in the latest monthly. And the week before, I was also in California visiting with a firm called Research Affiliates, and they're one of the experts in asset allocation, smart beta work, like we are as well. So it's really cool to see what they're doing. We do use some exchange-traded funds that use their underlying indices. But they do have some free tools on their website, and there's a link in the commentary that you can go to it. But one is dealing with this, it's this interactive website dealing with asset allocation. And so where have the markets been and where are they most likely to go because of valuations? And the thing that I've written about is that some of the asset classes have done well over the last 10 years, such as U.S. stocks. You probably should not expect a lot from them going the next 10 years, particularly relative to other areas such as emerging markets. In fact, at least according to Research Affiliates, the expected return for emerging markets is significantly higher than it is for the U.S. We're actually in the U.S. are thinking that returns above inflation are going to be small at best. But you know what? I brought you on here, and you've been asking me all the questions. I noticed how you turned it around. So really, what are some of the questions you're hearing from advisors?
Last week, I did travel out to California to meet one of our partners. I spoke to some advisors there. They had some questions about our international tilt.
Yeah.
Also, just how long can the U.S. market keep rolling, how it is. And U.S. markets have had a fantastic run past 10 years. Of course, last week or 2 weeks ago, they hit all-time highs and longest bull market on record, so they've been very well. But is it overextended with the high valuations? So, of course, after talking to them, letting them know that there's a high concentration of the top performers in the U.S. market, where we see 10 to 15 names really representing the majority of the S&P 500 returns, and where we should be tilting towards are where those areas of the market where we should expect higher future returns, and that's international.
Right.
So kind of reassured them and educated them a little bit on that.
Well, one of the things we're seeing, I know, related to that is when it comes to investor sentiment, particularly towards the U.S. markets, and particularly when you look at their asset allocations. I mean, you've done some work on that. What are your conclusions?
We're seeing that more investors are, in aggregate, are taking on a little bit more risk. They're more optimistic that the U.S. markets will keep on rolling how they are. And so that's kind of stepping back. That might not be in the best interest moving forward. So the sentiment is high, very optimistic. So we always have to think about why are we positioning the portfolios we are, and that is to reach our financial goals in the long run. And so maybe they're taking on too much risk at this time.
Yeah. Any other big questions top of mind? Actually, I know you've already given me a list of all the questions you've been getting.
Yes.
So
yeah. So
any other top ones?
Yeah. What do you think about pot stocks?
Oh, the marijuana stocks.
Yeah,
That actually
yeah.
has been a very popular question of late. Well, actually, there is a short answer. It's sort of like what we talked about when it comes to other hot areas like Bitcoin and cryptocurrencies last year. I mean, we are investment managers, so we will look at areas that we think can give us a rate of return. There are some areas, though, however, that can be considered glamour stocks that get a lot of attention. And when it comes to sort of that little industry right now, we think the valuations are, quite frankly, just too high right now.
Yeah, really volatile.
Yeah.
Maybe some of the millennials, some other different types of markets, demographics want to be part of that, but chasing performance never helps in the end.
Never does.
Yeah,
Well, Gio, thanks for coming on.
Yeah, thanks for
Next
having
time
me.
you're going to answer more of my questions.
you got it.
All right. And thank you for your time and trust in CLS Investments. We'll see you next month.